I'm just a guy. I'm just a guy who likes to invest stocks, who likes to share his thoughts, who likes to try to help people avoid some of the pitfalls that I've gone through. So over the last 20 years, I've been on the end of a lot of shenanigans that it's cost me a lot of money. And I think if I can help educate people to avoid the same mistakes that I had to learn the hard way, then I think, that's the least I can do.
Hello, and welcome to the Market Bull Podcast. Please note, topics and stocks discussed in this podcast are not financial or investment advice. To start off 2024, I spoke with Twin Turbo, a FinTwit account popular on X, or formerly known as Twitter. Now, Twin Turbo is a guy who has invested for stocks for nearly 30 years as a retail investor and has gone through the ups and downs of the investing cycles. He originally built his following on Hot Copper and has been a dedicated voice on social platforms. He talked about the lessons he has learned, why he started the persona Twin Turbo, what he looks for in stocks, his investment interests, and the pillars he uses to make his decisions. Here is Twin Turbo. Hello, I'm Ben Kostrich, and this is the Market Bull Podcast. Joining me today on the show, it's an interesting one. His name is Twin Turbo, commonly seen on Twitter or X, and he covers a lot of small cap mining companies in Australia and really just insights in that investing space. And it's probably the first time I've spoken with a FinTwit account, as the Twitter community calls it. And we're really just going to discuss a lot of, how he built his following, his passion in stocks, and more so where some of the opportunities or what he's looking at in 2024. So welcome to the show.
Thanks for having me, Ben. Appreciate it.
So we were saying, I've followed your account for a while, and of course it's gotten a fair bit of popularity, and I like to think it's got a bit of satire to it. There's always a bit of comedy value, which, that's what you really want to see, because there's a lot of seriousness in some of the ASX announcements, and it's good to sort of take a bit of a mickey out of some of them. But talking about your history and almost your inclination to start this and go down the investing route, where did your journey really begin?
So I've been investing in sort of the ASX now for probably 20, 25, 30 years on and off. It's been an interesting journey, but effectively I started back when the internet was fairly new. So it's been quite a journey on that aspect. But um, I really got into investing because my dad used to invest in mining stocks. So back, you probably heard some of the stories about Poseidon Nickel and some of those, like, going back sort of 30, 40 years when they would actually ring up exchanges and people would write things down on bits of paper and stuff. So I've always sort of just been exposed to business and the ASX and the stock market. And he was a lecturer in economics and commerce. So he just had a natural way of talking about finance. So growing up as a kid, it was something that I was always exposed to. So as a fairly young pup, I probably dabbled in the ASX, at a fairly early age. Um, but it wasn't a full-time gig for me initially. So it was really a case of just throwing a bit of money at it, seeing some of the wild gyrations that you see in the mining space and the biotech space. So that sort of gets you interested, right? Like typically what happens is you'll have someone, you'll have family that, will invest in something and it'll go up 10 times and you're like, right, oh, that's easy money, right? It's never easy
I can
money,
do
but
this. Yeah.
yeah, anyone can make a fortune, right? So,
Mm,
so I think, I probably really started to get involved in the bull run just before the GFC. So sort of 2006, 2007, and learnt some lessons along the way. So, the ASX is an interesting place. It has some interesting characters, both from, the management and the fellow punter on ASX stocks. And there's a lot of traps and pitfalls. So I think, I've now spent 25 years navigating those pitfalls. Sometimes you still, even today, you get stuck in those pits and fall for some of the trickery that happens on the ASX. But um, yeah, it was just a passion from day one. It was just about learning more and expanding my horizons, and my background's actually in IT.
mm.
But I did a very diverse degree in that I did things like accounting and marketing and management and psychology and artificial intelligence and international marketing, financial planning. So it was a very varied degree, which actually allows me to take a fairly unique approach to how I look at some of the ASX listed stocks and what they get up to and the psychology behind it and some of the shenanigans that goes along with it.
I think that'll be a topic, a lot of the shenanigans and unpacking as we go on. But even you say there about understanding and having a different outlook on, companies. I mean, what were you really using to become, I guess, a foundation or the platform for you to analyze a certain company or stock and then really use that to be like, would I invest in it or not? Like what became the pillars of your, I guess, investment ethos in a way?
So, I'm lucky that I've done some basic accounting. So it's really important, I think, for an investor to be able to read a balance sheet, understand the difference between a balance sheet and cash flow statements, and just some of the accounting games that can go on that you'll see. And I've sort of fine tuned that for the ASX stuff over the last 20, 25 years. But just having that basic understanding of accounting really does help. Uh, I think the other thing that really helps is if you're going to play in, say, the biotech space, you really need to understand the biotech statistics and the medical terminology and the phases that companies go through. So, for example, you'll see a biotech company put out some results on a in vitro study, right? And the way that biotechs work is, you first off, you test something in a petri dish in a lab, and then you test it in an animal, might be a humanized mouse. And then you're going to do a phase one safety study. And then you're going to do a phase two study. And then you're going to do a phase three study. And then you might have a commercial product that that ends up actually making money for the company. So I quite often see on the ASX, for example, the biotech space really doesn't, the investors don't get very excited about a in vitro study, like basically a lab study or an animal study, because it's so far away from commercialization that um, it's probably 10 or 15 years before we actually see this potentially as a billion-dollar product. But by not understanding what that means is you'll read an announcement, "Oh, it cures cancer, it does something amazing," and you jump in and then you realize, "Hang on, it opened up 100% up and now it's 0 or
Mm.
negative at the end of the day." And the average investor doesn't understand what the hell happened, right? So it's really good to have a basic understanding of the space that you're investing in. So if it's biotech, so if it's mining, you need to have a basic understanding of geology and what makes a mine that is potentially profitable. Um, we've seen just recently a few of the lithium miners who have, Core Lithium, for example. It's one of the higher cost miners, but a whole bunch of people jumped into that. And as soon as the lithium price fell, they're now looking to be on care and maintenance, for example. So
Mm.
it's really important to understand what you're investing in, or at least the dynamics of a cycle, or the dynamics of a mine if you're in mining, or biotech if you're in biotech, or technology as well. Like if you, I'm lucky enough to have a degree in IT, and it's actually really hard for me to invest in IT companies because I realize that 80% of them are just BS, right?
Mm.
So so we had a spate about 18 months ago, 2 years ago, where every IT security company, um, was going gangbusters on the ASX, and I'm looking at this going, "Oh, but
How
their
does this make
products aren't
sense?
the products aren't great. They're not gonna make
Mm.
profit." All the general business issues that you have around, ultimately, you need to be able to sell something and make a profit. It's very easy for those not involved in a space who understand a space to get carried away with the excitement of it. Um, so for me, it's you need to have a basic understanding of what you're investing in, especially in the small cap space. In the big cap space, you can invest in a bank, and you don't really need to understand um, the banking space to understand that a bank makes profit, and you get paid a dividend and that style of thing. But if you're going to invest in the junior space, those sub 100 to 3, 400 million companies, then you really need to have a basic understanding of what they do and the cycle. Um,
So then, yeah, as you were exploring this and gravitating towards certain areas of the market, mining and biotech, like you're saying there, between the small cap and the large cap, the big ones that they're going to have volatility, but people get in them for a dividend and almost security. Did you find out through, in a way, trial and error, where your risk curve ended up becoming, and finding that you really did enjoy finding those diamonds in a rough, for example, a lot of research, high risk, high reward. Was that where you sort of lent more into and really found more enjoyment out of? Or where would you sort of classify your, I guess, outlook on your an investment portfolio, for example?
Um, yeah, so I think for people listening, I think it's really important to understand the type of investor you are. Are you the sort of person who's, a punty McPunt face, as I like to say, who's someone just, throwing a few grand or 10 grand or whatever the amount is into something that might go up 10 times? Or you're the sort of person who's looking for better than bank interest return. And everyone has a very different investment style and portfolio. And it's really important to understand the type of person you are. So really early on, I understood that I was just a mad degenerate punter. That was me. And I structure what I do in the markets accordingly. So I tend to be looking at the very low end junior space. So, mining companies that are drilling a hole but have a market cap of 5 or $10 million. And if they hit something, it could be $1 billion company, right? So
Mm,
to some extent, it can, even detrimentally can be something that's a great thing and a horrible thing at the same time, because you can make great sums of money, but you can also lose great sums of money as well, just depending on the cycle and the investment. It's very high risk, high reward style of investing that I do, which is in the junior space. Um, and everyone tends to focus on the high reward, but they forget about the high risk typically. So as an investor, it's just really important to understand what you're trying to achieve out of the market. Like everyone, if you ask someone and say, I just want to be rich, right? I want to turn my 10 grand into $1 million, right? If it was easy, everybody would just do it and everyone would be
mm.
rich. So it's important to understand, is the amount of money I'm putting into the market something that I'm willing to lose 100% of it? Or is it something that I just want to grow slowly? Because unfortunately, you can't take an amount of money and grow it quickly with no risk. Like, it just doesn't happen, right? So you'll hear stories about people getting lucky or thinking that they're the world's best investor because they bought X, Y, and Z. But I can tell you now, there's lots of great mining companies that go nowhere, and there's lots of crap ones that do really well. So, if you think you're the world's best biotech or mining investor, then there's definitely a very large percentage of luck involved in in that space. So it's just like I said, it's really important to understand the sort of person you are. But me, I'm at that crazy end of the punting market. That's just what I do, what I like, and I structure my finances accordingly. So
Yeah, the stock market's a great place at humbling people. I mean, I look back to when I first started investing, and it would have been, just preceding the COVID crash. And, I had a lot of friends that were either in it and were sort of, quite upset with how it unfolded. But then instantly the rebound was pretty phenomenal, and everyone thought that they were a genius. And the subsequent years have been well, proven to be very, very difficult. And it's really now leading
yeah,
into a stock pickers market, which is another sort of interesting. It's not just you can put money anywhere and it's going to ride. It's going to be very particular based on, yeah, geography, political. There's a lot of factors that are going into it. But before we dive into, I guess, some of your areas of interest, this all sort of leads down the path of why did you start your account on Twitter or X, and I guess growing that, because it's not a small account, and of course there's much more room to grow to the moon. But, 15,000, a relatively, consistently engaged audience. How did you go about growing that, and even why? Why did you start, communicating what you were discovering and learning and putting it out into the World Wide Web?
so I'm probably going to start showing my age here, but I've been online for quite a few years. So for those that aren't on Twitter, you probably have heard of a forum called Hot Copper. So I've been a Hot Copper heart now for about 16 years, I think, continuously. So, which I think is probably there's probably very few people out there that have done that, have been around for that long and been engaging the stock market community for such a long period of time. Um, that brings with it a lot of love and a lot of hate, because I'm opinionated and I I try to give both sides of an argument. I try to stay balanced when I talk about things. I don't always get it right. There's certainly stocks that I've liked in the past that have gone nowhere, and there's sort of stocks that I've not liked and they've done really well. But I typically try to give a balanced view on certain stocks. So sort of back in the day, there was a lot of different bulletin boards, effectively like Hot Copper. So we had Aussie Stock Forums, Crazy Jim Smith, Hot Copper. There was a bunch of them. So I used to frequent a lot of them, and I suppose my quest for learning and engagement around stocks led me to do a lot of posting on those forums. So was a heart am a heart on Hot Copper for the last 16 years, and about 6 years ago now, I had Twitter and I was following an account called Stock Swami. I don't know if you've heard of Stock
Rings a
Swami.
bell, vaguely, yeah.
He got in a bit of trouble with calling out some of the mining entrepreneurs for what he thought was shenanigans and ended up in court and whatnot. But that's another story
Mm.
for another time. But yeah, he's well known for, I suppose, calling out some things on the ASX, some of the grey area that exists. Um, Gets it right most of the time. Doesn't always get it right, but he's good value. It's always good to listen to a negative view. So I always find that we're surrounded by positives. We should also try and surround ourselves with some of the negatives as well, just to keep ourselves balanced. So I was engaged with him, and he said, "Oh, you should come across onto Twitter, and it's a much better forum than what Hot Copper is." And so for me, I thought, all right, I'll take that leap, and sort of moved a lot of my musings and postings from Hot Copper onto Twitter, where I had a bit more control. And one of the issues with Hot Copper is sometimes you have to tread a fine line not to get moderated about saying things. And there has been accounts where there have been times where managing directors have sued to get people's details on Hot Copper and stuff. It gets pretty messy
Oh,
at
okay.
times. So, and there is some ATSIC rules around not giving financial advice now, like, around what you can and can't say and stuff. So, but yeah, so I decided that I had quite a following on Hot Copper that I would then transition across to Twitter, and it gives you a few different avenues to engage people as well. So one of the things that I've done a fair bit in the last few years is I've done Twitter Spaces, which are effectively like a podcast. So, I've done them on different sort of commodities. So one of the things I've tried to do in the last sort of 15, 16 years is help educate people. So my my DMs are full of people just saying, "Hey, what's your thoughts on this? Can you help me with this? Hey, I like this. What do you think?" So I try to give a balanced view. I try to help people with seeing through some of the BS. Sometimes that's really well appreciated, and other times it's like, "Oh, who is this down ramper?"
Mm.
So, but yeah, I've been engaging with the investing community now for a long time. So I suppose, you know, I always say to people, if you don't like what I say, I'm happy to give you a refund. Um, and for those that know, Hot Copper and Twitter, there is no payment. So
Yeah.
I'm happy to give you back your $0 at any point in time.
And of course, I mean, it's the community on Twitter X is really. I saw you thank them because it'd been quite a year where, especially last year, quite difficult. But I guess the thirst for education and bringing these people together, it's really sort of empowered a lot of people to either open an account or not be shying away because of a few, well, vast amount of burn downs in some areas and some companies. But I mean, when you're looking at what you saw crystallize really last year and probably now venturing into 2024, are there particular commodities or areas of the market, or we can start on mining and maybe progress to biotech that you think have been, I guess, overhyped or undervalued, or where are you really seeing, or where is your interest peaking in regards to Australian mining?
It's a really good question. Look, it's in the last few years we've really gone from boom to bust, in my opinion, in the junior space. I've been doing this long enough to know that in boom times everyone looks like they're a genius, and in bust times it's really, really, really hard. So I think the really, really, really hard has been playing out for the last sort of 18 months to 2 years now. We had that sort of COVID crash, and we had it we had that bounce come out, and a lot of people made a lot of money on that bounce. This exact same thing happened during the GFC. I was lucky enough that part of my early education was to absolutely get hammered in the GFC and then to ride
Mm.
the boom on the way out. So I understand sort of the dynamics of the market. There are times where you can really comfortably play in the junior space, and there's other times where you need to just pull back a bit and not be so crazy. Um, so yeah, it's been an interesting journey the last sort of 18 months. Where we go from here is an interesting thing. I fundamentally believe that um, whilst lithium has had a hard time in the last sort of, you know, 12, 18 months, probably 12, 18 months now, I do think that the general appetite for lithium and battery metals will come back into vogue. The thing about commodities is you have boom and bust cycles. We just see that all the time. So there's a saying that is the cure for low prices is low prices, and the cure for high prices is high prices. Which
Yeah.
basically means that, if you have a commodity or something that is a low price, then eventually that drives supply out of the market because people just don't want to sell, they don't want to invest, they don't want to explore on things that don't make a return. And then that fundamentally causes a supply problem. And then vice versa, when you have high prices, every man and his dog goes looking for that commodity. And then eventually supply catches up so we've seen some really interesting times in the lithium space. So 2018, for those that were investing back then, that's only 5, 6 years ago. Lithium was a dog, right?
Mm.
There were so many WA miners that were going broke. Um, there were companies that were effectively trading below cash because people basically assumed that their mine would never make money and the cash balance would just get eaten through. And, back in the day, Galaxy Resources and a few others were just trading at really low valuations. And then we had this massive bull run in lithium price, and suddenly, the companies that were effectively worth, a couple hundred million are now worth 10 billion. And then in the last sort of, 6 months, especially 6, 12 months, we've seen a lot of those lithium hopefuls, uh, yeah, go back into care and maintenance. Like I said, Core Lithium was an example of that. You see, SYA, the same sort of thing. These companies that are trying to get these higher cost mines up and running, yeah, they're not making money at low commodity prices. So we saw something very similar in the coal space over the last sort of 4 or 5 years. Coal Twitter became a thing. About 2 or 3 years ago, I was yelling at anyone who would listen about that coal was going to do well, and it did really well. The coal price went up. Everything's settled back down again now. But going forward, I think the same fundamentals that drove a lot of this stuff will still play out. So, in 2018, everybody knew that EVs were going to be a thing, right? So it made no sense for lithium miners in 2018 to be worth cash, right? Or cash and asset, right? Effectively no valuations on the future income. Um, so you get that. You get high prices and you get low prices. It's all about the companies that can survive the low prices, and then you wait for the swing to arrive. Now, lithium, for me, I think the forward demand curve certainly is very interesting. So whilst it's in a doldrum now, I definitely think there's some opportunities at the moment in the lithium space. That said, I think junior mining is still really, really, really hard, and capital allocation is still really hard. So it's important to, especially for people that are just thinking about it now, it's probably better to stick to the low cost guys like the Pilbara Minerals and those sorts of people who make money at any price and never have to go to the market. They've got big cash balances and they'll
Mm.
ride out any issue. Um, but then some of the best returns will be when lithium does eventually swing. You've got all these $5 to $10 million market cap lithium companies that have got known grades, known deposits, and yeah, they'll drill a few holes and the market will get excited again. And they'll 5 or 10 bag just because that's how the market works, right? As you get these swings in in popularity. So I
Mm.
think I think lithium's interesting. I think copper's going to be interesting because there's at the moment most people they call copper Doctor Copper, right? So they see that as a gauge on global market dynamics. So when everything's doing well in the world market, the copper price goes up. When everything's going bad, copper price goes down. But I think if the world's serious about electrification, then I think there's going to be a disjunct between that ethos and just straw out supply and demand. So I don't know when copper will get its turn, but I think in the next few years, I think there's a really good chance that copper does well. Um, and then there's a whole bunch of other commodities. Nickel looks pretty screwed. Unfortunately, the Indonesians have screwed nickel and cobalt. So I sort of see that there'll be a struggle going forward, just generally. Everyone thought that sulfide nickel would do well just because of its better quality for the battery space, but I think it's been shown now that the Indonesians have got a handle on the nickel. So I think nickel's going to struggle. So definitely, it's about picking your space, picking the commodity. I know there's lots of really wealthy WA billionaires who are looking at fighting over the lithium stuff in WA. So that I think that'll continue to be a bit of a topic going forward.
You took the words out of my mouth. Given the weakness in some of the lithium prices, and given that there'd been a lot of companies that had done somewhat well and had come up a lot, it's interesting to see so many of the rich billionaires pulling out their checkbooks, and it's all strategic because in reality, they can weather a fair bit of the storm in regards to volatility, but you know that they're accumulating because they can see a serious picture in the coming 10 to 20 years, and they want to have a decent seat at the table. And lithium is just prime for that. I'm a big fan of copper, and I know uranium has had a very good run on over the past, really 8 to 12 months. The price has really broken out across the spot pricing, and some Australian companies have done very well. But there's ample opportunities, but there's a lot of I guess research and analysis to go on, and that's where I find these accounts, such as yourself online, fascinating because you really do spend a lot of time looking into the ins and outs, and as you called it, the grey area. And a curiosity bit because we know it's the twin turbo, it's a persona to. I guess keep as soon as you put your face out there, you're probably very open to a lot of positive and negativity, and it's a bit easier to have a character to portray yourself. But was there reasons behind to sticking to that? And I mean, how have you found it in regards to, I guess, community engagement? You said earlier that you get a lot of, I guess, followers reaching out, asking questions in particular about it. Do you find that it's a bit easier to grow given that you've got this persona? And the second part, you said, what are the really the most common questions that these followers are asking? And is that the thing that's driving, you said, your spaces, but also just your daily content and posting?
Um, so around the handle, so like I said, I've been doing this for a long time and was a young pup, and the thing about Hot Copper is you have to pick a username. So I just picked the one that I'd been using as a teenage, like as an early adult. I'm a car guy, so one of the first cars I built was a twin turbo 6 cylinder old school Celica, like a 1977
Yeah.
Celica, like an old Mustang back one. Um, so I think because I grew this following on Hot Copper for, I said last 16 odd years. That's probably more than that now, probably 18 years now. Um, so I think everybody knew me as that. So I don't think there was a conscious effort at the time to sort of stay anonymous. But unfortunately, there is an aspect of the ASX and investing where if you say something which is against a company marketing spiel, the company tends not to like it, right?
Mm,
And there's definitely been a history of people who say things who are then targeted by the company for legal reasons. So I think one of the aspects is whilst I'm always very cautious to not slander anybody, I do try to take a balanced view, which does at time mean that I will say, I think this company is not quite, on board with the truth
mm.
on whatever the. So So one of the things about the ASX and especially the junior mining space is unfortunately you'll have a group of people who tell a story that may not quite be true. And then you'll have, well, certainly a version of it that is certainly maybe a little bit different to the actual truth. And then you'll have investors who, for whatever reason, are also telling people that, hey, this is the world's best thing that I've ever seen, and it's not. You know,
Mm.
I've in the past I've seen emails from management of companies saying XYZ, and then that word for word XYZ in a poster's social media post. And it's like, well, this isn't the poster's thoughts. This is direct marketing from the company, right? And so there's lots of stuff that goes on. And the one of the things is if you have some anonymous account or you just have some guy, then it's very it's a lot more work to say, "Hey man, don't say that, here's a legal threat," right?
Mm.
And I've been reached out by DMs by very powerful people who say, "Hey, you need to watch what you say," right? So some of the barrier to, I suppose, getting to me at a legal level, because I'm just a guy, I'm a retail guy. I'm not a broker. I'm not, I've just been a guy that's been doing it a long time, that's seen a lot of crap and a lot of shenanigans over the years. And those that have been doing it for a long time, you know it when you see it, right?
Mm.
And if I can make it just a little bit more difficult for those guys not to be able to reach out and threaten me legally, even if there's not a leg to stand on, they still use the legal ramifications as a venue or as an avenue to stop people saying negative things.
Yeah.
Um, Unfortunately, it just happens, right? And we do, and I've seen it in the past, and I continue to see it, right? So, I don't know if you've watched the Money of Mine podcast, but they've
Yeah.
been on the
Familiar.
end. They've
Yeah.
been on the end of a few things that everyone knows who they are. They're accessible, so it's really easy to get a lawyer to say, "Hey, boys, watch what you say," or
Yeah.
and even if they run things, they've got access to legal guys, so they're available to you know um, they earn revenue from what they do, so they can spend money on sort of some defense. I'm just a guy. I'm just a guy who likes to invest stocks, who likes to share his thoughts, who likes to try to help people avoid some of the pitfalls that I've gone through. So over the last 20 years, I've been on the end of a lot of shenanigans that it's cost me a lot of money. And I think if I can help educate people to avoid the same mistakes that I had to learn the hard way, then I think that's the least I can do. And that said, you've got to be able to do it um, in a way that doesn't defame people. But there are times when you can ask questions and you can point things out that maybe the average person has missed, and by sharing that information, then you can avoid some things. And people will come out to me like there'll be a stock that's being heavily promoted online, and I'll point out a few of the things, and I'll get a lot of anger directed towards me. And the same people that were angry at me 6 months before come back to me and say, "I'm so glad I eventually did some due diligence, and what you said turned out you were right. I exited, and now that share price is 80% lower than what it was when I exited. I took a haircut at the time. That's fine. But, thank you. I was angry at you at the time, thought you were a mad Dan ramper, but I appreciate what you said." So, yeah. Uh,
It is that fine line because there's a lot of emotions involved, of course, in anyone's position. The amount of money you put up, you're emotionally tied to it, and it is very difficult for people to control their emotions given the last period of years, even throughout time, arguably in investing. It's not something that necessarily is easy for everyone, and that sort of alludes to our beginning of where you sit on the investment hierarchy or the strategy line. If you're going for the stuff that is highly volatile, then you got to be willing to lose it all or make it all, and vice versa. If you're on the other end, which is the safe cap investing, you've got a bit more, I guess, comfort knowing that you don't have to monitor every day of every hour of the week, which makes life a little bit easier as well.
yeah. So I think for me, it's I try to do that, but I also try to inject a bit of humor in there as well, because I think life's too short not to take the piss. And even if you're taking the piss out of yourself, there's certainly been some things online where I've I've had a few jabs at myself, and most people will get it. But I think keeping it light and being extremely helpful. I don't think there's been a genuine DM that I've never responded to. If people reach out to me and ask me things, I'm always happy to spend some time, even if it's a new stock or a different stock or something I haven't looked at. But it's funny when you've been doing this for as long as I have, you see the same assets, you see the same company, you see the same management reappear and come back, and so I'll usually have a fairly decent idea about a company just because I can look at it and go, oh yeah, that's the old asset that was recycled 15 years ago that fell down because of this reason, or this guy is really successful. He's led 3 companies and they're all done well, or this guy just appears every 6 months and blows investor money, and so But I'm
You
I'm
find that
always
out.
happy. Yeah, I'm
Yeah.
always happy to share my thoughts, and I put a big caveat on that as I don't know everything, but I'm happy to give an opinion.
And I mean, at the outset, I sort of said that you were mostly in mining, but you seem to have quite an interest in particularly the biotech, especially in Australia. I can assume most of your investments are skewed towards Australian because, well, as I'm finding out, there's way too many markets around the world to be almost on top of all of them all the time. But in the biotech scene, I mean, what's been your attraction and also lessons that you've learned through that? You talked about the stages of where biotech is, but that is probably an industry that the small cap mining companies have done tough going. The small cap biotech companies have even done it harder. So, what did you really experienced or learned, or even what do you appreciate about that sector of the market?
So biotech has a lot of the same, um, attraction that the mining space does. Small market cap companies that can do really well in reasonably short periods of time. Like if you're a biotech company and you release a drug, or you have a study, or you partner with a big pharma, the company can re-rate quickly and do very well. So there's certainly been examples of companies that if you bought them 5 or 10 years ago, you would be a very happy person. If you stuck a few $1,000s in there, you'd be in the millions, right? So that's the attraction. The attraction is, again, high risk, high reward, stuff. The difficulty with the ASX biotech space is the you just don't have the same investor base that you have in the US, and it it's a trail it's sort of led. It's a trail of dead investors along the way of reaching glory, right? Because what typically happens is a biotech will release something, and the market will get super excited. The stock will go up 5 times in a good market, and then we wait for the next round of news. And that might be 12 months away, it could be 2 years away. So you see, if you have a look at most biotech, companies' share price, you have these really quick re-rates up higher, and then they just fade as the news disappears. Then they re-rate higher, and then and they fade. So typically, it's a very hard space for people to invest in, just because of, you've got to have a pretty long-term focus, because drugs don't get approved quickly. Like if
Mm.
I can discover something that looks amazing, that has all the right things, but then I've got to give it to people, and I can't just give it to people. I can't give it to 200 people tomorrow and say, "Yep, I've cured something." It's got to go through a safety study. You got to give it to 5 people, make sure that they don't die, they don't break out in all these, different things. And then you got to collate the results, and then you got to release it. And typically a phase 1 study, which is like the safety side of things, it's pretty boring, because they're not even really testing for the drug's effectiveness. They're just typically testing for, does it hurt people? And then if it doesn't hurt people, then you go to a phase 2, which is a small study where you're actually trying to look at the efficacy of a drug to say, does this drug actually work? And that's a fairly small number of people, because obviously it's very expensive to run these sorts of studies. But then again, you've got to give it to them. People have either got to get better or not get better. You've got to collate the data. You've then got to release it. You've then got to organize a phase 3 study, which can be tens of millions of dollars if you're going to give it to 1,000 people. All right. So under controlled environments, these are the things, right? So it's a long, expensive process, right? So um, from an investing point of view, there's large periods of time where the investor's sitting there doing nothing. And unfortunately, when stocks have periods of no news, investors get bored. So they
Mm.
sell, they look for the next, big exciting thing, right? So you it can be difficult for a mining company or a biotech company in a period of no news to meaningfully go higher, right? So you need something else happening. You need, for mining, it might be neurology. For biotech, it might be partnering with another company or, a licensing deal. There has to be something to keep sort of the fire burning, right? So we typically see that biotechs is really hard because everyone gets really excited and then everyone gets really bored. And then they get excited and then they get bored. And it's just this
Mm.
cycle of excitement and boredom. So but it's the thrill of the chase, right? Like everyone just wants that, quick buck or, even if it's a slow buck, it should be a good earning buck, So it has a lot of the same market dynamics that mining has, that big potential pot of gold at the end of the rainbow. Um, so yeah, there's a lot of crossover. You'll find a lot of people that play in the space, play IT companies, play like Afterpay and ZipPay and all the
Mm.
buy now, pay later stuff. I don't think anyone was an expert in buy now, pay later, but there was a lot of punters in it. So,
Yeah, yeah, that bubble made a lot of money and also sort of eroded just as quickly in a way,
yeah.
which is again, another sector that a lot of people got burnt in and probably are still potentially being burnt in. But that's almost the nature, as we said, of investing in some of these things is you have to almost be exposed to it once to understand what it's like. And sometimes it takes us more than once to learn a lesson, but we're creatures of habit in a way. We're pretty good at predicting, or I should say, continuing the same sort of cycles and behaviors. And there's always a new boom. There's always a new bust. It's almost, just human nature. It's what we chase in a way, as you said.
Yeah, and look, one you mentioned about learning a lesson, right? And for me, one of my favorite sayings is, "It's not a mistake if you learn from it, then it's a lesson." And investing is all about lessons. So, I think if you're an investor and you get it wrong or you lose money, you've really just got to have the approach of, "That was a lesson that I needed to learn. That will make me a better investor." And hopefully next time I won't make the same mistake. You probably will, but,
Mm,
sometimes you gotta beat the kid with the bat 10 times, not once, for them to get to understand the lesson, right? So in the investing space, you know, as an investor, you've just gotta understand that there are lots of traps, there's lots of pitfalls. Um, you might make a really good investment in something and you might think you're the world's best investor, but I'm telling you now, there's going to be times where you have an equally or worse time where you lose a lot of it. But it's about taking those lessons that you learn, those mistakes, and then being better for the next time around, having that awareness and then having a strategy that suits you in the investing space that maximizes how well you do. And there is no magic bullet. There is no magic algorithm or trading strategy that will guarantee everybody makes a killing. You've got to find what works for you. And one of the things that people often come to me and say, if you had to tell me something about investing, what would give me your number one pick for being a good investor? And one of the common answers I give to people is, well, there's actually sort of 2 things I tell people. One um, is this concept of you don't have to be all in or all out. So if you like something and you like it and you think, "Oh, it's probably a little bit too high priced, but I really like it and I really wanna get into it," well, buy some. Don't buy
mm,
every dollar's worth today, right? Take a little bit, buy some, see how it pans out. If the price drops, you haven't fully committed yourself. You don't have to be all in on day one when you find out about something, right? And if it means you average up or your cost is higher, that's okay because you probably know the company better than you did, or there's been some developments in what the company's doing and they're on track, or you've had a chance to do a bit more due diligence. And the same goes for when you decide that you're going to sell a company, right? For whatever reason, it's not what it's gone up and you think, oh, should I sell? Should I stay? You don't have to sell everything either. You sell a bit. One of the strategies that I often implement is, if a stock's gone up in a quick period of time, I'll at least sell a little bit, even if it's 25%,
mm,
30%, 40%, because what it allows me to do, like I don't have a magic crystal ball, right? I can't tell what the share price is going to do tomorrow. It might go up, it might go down, right? It might be really good in 10 years' time or 5 years' time or next year or whatever, but I don't know what it's going to do tomorrow. So if I've had a really good success on something, I'll take a little bit off the table because what it does, it means that if the share price goes back to where it started, I can now buy back that little portion. If I sold 25%, I can buy that 25% back, and I can buy back 35%, like the equivalent of a bit more for the same
Mm,
price, or I can take some money off the table and I've still got the same amount of shares I had last time. I'm happy to forego that potential missed profit by de-risking a little bit. So 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 one of the things that I think a lot of people struggle with when they're investing is they sit there and they go, "I have to buy it all today," or "The day I decide I'm gonna buy, I have to buy, and the day that I decide I'm gonna sell, I'm all out." And then they'll
yeah.
sell it. They might make, they might double their money, but then the stock might continue to be, go up 10 times because it is as amazing as you thought it was gonna be. So you don't I often see investors come to me and say, "Oh, I sold out at such and such. I shouldn't have. I knew it was gonna do really well." It's like, well, you don't have to sell it all. Like so that for me is probably one of the biggest things. The second principle that I often say to people when they're looking at a stock, especially when a stock's gone up, or even more so when a stock goes down, but you've got any sort of decent price movement, is I say to people, ask yourself this very, very basic question. So, say I bought something at a dollar, right? 6 months later, it's $2. I say to people, today at $2, would you buy it? If you'd never heard about the stock or you'd never bought the stock when you bought it at a dollar, it's now $2 6 months later. Would you buy it today? And if the answer is no, then why are you holding it? Because if you weren't going to buy it today at $2, why do you hold it? Right?
Mm.
Especially if you haven't taken anything off the table, right? And the same goes for when the stock is going down. So we tend to wed ourselves on our decisions, right? I bought this stock. I thought it was really good. It's not quite turning out the way I thought it was. The share price has gone down, but oh, if it just gets back to where I bought it, then I can exit and I won't lose any money. You always hear that, right? And my thing to those people is always, would you buy it today? Even if it's gone down 50%, would you buy it today? And if the answer is, "Oh my god, no, management are clowns, blah, blah,
Mm,
blah. I just wanna get out." Mate, you have the ability to get out,
yeah.
right? But they wed themselves to this idea of, you know, "Oh, it's down 50%, I can't sell. I have to wait for it to get my money back," right? So, for me, taking losses in the market is just as important as taking profits, right? It's better to lose 50% than 90%, right? So it's really hard for people to sort of admit to themselves they made a mistake. But if they ask themselves this simple question of, would I buy it today? That should give you a really good sort of general feeling about whether you should actually be holding it or selling it. So,
No, well put. I think from my foundations, I had a few textbooks that my parents used to have, and going back to what you said at the beginning, when yeah, people a bit older would be, instead of a mobile phone, you'd call up a broker and they'd place a buy that night for the next day, and there was lots of topics about your candlesticks and what volumes and all this. I guess it's a traditional analysis of stock charts and patterns and why. But one of the keys in that was, having a game plan and understanding that, just because you want to get it on a certain day doesn't mean you punch your ticket and get it all, or vice versa, you sell it all. It's about, having a bit of there's multiple options always available. And at the end of the day, it's your decision, but be comfortable with understanding what that decision and the ramifications of it. But I think those are really well put points. And I think for myself and probably a vast amount of others, it's beneficial and helpful to just have that little bird in your head that just asks that question, because you need that critical thinking to be successful, or at least have a little bit more fun, at least following and investing in stocks. Because at the end of the day, it's quite enjoyable when you're researching and you're finding these winners, or the community. And that's where I wanted
mm,
to tie it back to with what you've done. You said you're readily available for contact, and you've got your Twitter or X account, which, as I said, it's pretty frequent. But for those that want to continue to engage and I guess follow you, and I mean, what do you provide along with, you said, your spaces that's monthly or quite frequently, as you said, but if listeners and viewers are quite interested in what you've said and want to follow you, I mean, how can they engage with your content and I guess your views and opinions and learnings and as you said, finding the shenanigans out there?
Yeah, I think the easy thing is just to follow me on Twitter, or X as it's now called. I'm always, like I said, I'm always open to DMs if people want to reach out within reason. Obviously, I'm not out trying to give mentorships or any of that sort of stuff, but yeah, they can follow me on Twitter. Listen to the spaces. I do them fairly infrequently, just depending on the demand. So I've been fortunate enough to sometimes do Twitter Spaces with people like Emmanuel Dat, who runs Dat Capital. So he's quite knowledgeable in the junior mining space. But then there'll just be times where I just get on and we just talk the shit, and
Mm,
people
have a
it,
ramble.
have a ramble. So and look, I think part of that education process is to listen to as many people as you can, get differing opinions. One of the great things about Twitter and is that you have the ability to engage with so many different people. Like, one of my favorite things to do on Twitter is to engage with geologists, because I'm not a geo. I don't, I've been around junior mining for a long time. I understand a lot of geo principles, but if I see something and I've got access to someone who usually charges themselves out at $300 an hour and they're willing to answer my question or engage with me, then that's great, right? It's one of the few areas where you can actually just get on and talk to people who have other experiences than you have yourself, right? And the more you engage with people and the more you get out there and talk to people, the better you get. And ultimately,
Mm,
everyone just wants to be the best investor they can. So,
yeah.
if people follow me, understand that half the stuff I say is sarcastic.
That's why I tried to reference the outset. You got a bit of a satire view on it, a satirical element or component to it.
Yeah, there's lots of pitfalls. There's lots of shady dealings out there. There's lots of grey area. And hopefully people that engage with me or follow me see that, there's, even companies that I've held in the past, I've given a roast to when they do something stupid, right? So,
Mm.
um, even the good companies can be bad, and sometimes the bad companies can be good. But yeah, just give me a follow and reach out and have a listen to when I'm talking. So
No, I appreciate it. It's my first interaction with you, and from the sounds of it, probably having a few more as the year go on. And yeah, for those, find you on Twitter, Twin Turbo, little cars. You said a big fan of cars, so I'm sure there's also ample content on certain cars that pop up from time to time. But yeah, thank you so much for speaking on the show today. And yeah, let's see what happens in 2024.
yeah, just hopefully everyone can make a few dollars along the way, and it's a bit better than 2023.
Thanks for listening to the Market Bull podcast. If you enjoyed it, please make sure to like and subscribe. You can follow the Market Bull on our socials at Twitter and LinkedIn by searching The Market Bull. You can also subscribe to our newsletter on the website by visiting www.themarketbull.com.au.